It's March 30th, 2026. Bitcoin just flash crashed 2 grand and bounced right back. Square flipped the Bitcoin switch for every merchant in America, and miners are literally leaving Bitcoin for AI. Let's get into it. Today's episode is brought to you by Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just survived a $2,000 flash crash in 24 hours, and honestly, it was wild to watch. BTC tanked below $65,200 as the Houthis jumped into the Iran conflict. Panic selling kicked in, and for a minute, it looked like we were heading to the low 60s. Then Trump dropped the bombshell that the US is in active talks with a new regime in Iran, threatened to blow up oil infrastructure if no deal happens, and Bitcoin ripped right back to $67,400. Geopolitics is running this market right now, and if you're not watching the Middle East, you're trading blind. Square just turned on Bitcoin payments for millions of US businesses overnight, and no, merchants didn't have to opt in. Jack Dorsey straight up made BTC acceptance the default for every Square seller in America, which is arguably the biggest single-day merchant adoption event in Bitcoin's history. Think about what this means. Millions of coffee shops, barbers, food trucks, and retailers can now accept Bitcoin without lifting a finger. Dorsey's been talking about Bitcoin for years, but this is him actually putting his money where his mouth is at massive scale. Bitcoin miners are literally abandoning ship for AI, and the numbers don't lie. The network hash rate just posted its first quarterly decline in 6 years, first time since 2020, as mining operations redirect their computing power to way more profitable AI data center workloads. This is a structural shift, not a blip. When it's more profitable to run GPU clusters for AI training than to mine Bitcoin, miners follow the money. The question is whether this weakens Bitcoin's security long-term, or if difficulty adjustments just absorb the hit. Lido's token lost 95% of its value, and now the DAO wants to buy it back. You cannot make this up. Lido DAO just proposed a $20 million LDO buyback to try and put a floor under a token that's been in absolute free fall. Look, buybacks can work when a project has strong fundamentals and the token is genuinely undervalued. But when you've dropped 95% and you're using treasury funds to prop up the price, it feels more like a Hail Mary than a strategy. The vote's going to be spicy. AV4 just went live on Ethereum, and this isn't just another protocol upgrade. They're going after real-world credit markets. The biggest lending protocol in DeFi is officially trying to bridge the gap between decentralized lending and traditional finance. If Aave can actually pull off real-world credit on-chain, that's a game changer for the entire DeFi sector. We're talking mortgages, business loans, credit lines, all running through smart contracts. The governance battle leading up to this launch was messy, but V4 is finally here. Charles Hoskinson just bet $200 million on a privacy chain that basically nobody asked for, and it's now live. Midnight has officially launched, and it's Hoskinson's biggest project outside of Cardano, aiming to solve privacy and regulatory compliance at the same time. Privacy plus compliance is a genuinely hard problem, and most projects pick one or the other. Whether Midnight can thread that needle with $200 million in backing remains to be seen, but you have to respect the ambition. The Cardano community is watching this one very closely. The Ethereum Foundation just staked $46 million in ETH in a single day, 11 deposits, each around 2,047 ETH, totaling 22,517 tokens. They're accelerating that 70,000 EE staking plan and clearly switching from selling ETH to staking it for yield. This comes right after the EF sold 5,000 ETH to Bitmain in a $10.2 million OTC deal. And Bitmain is making its biggest Ether purchase of 2026 while every other corporate treasury is pulling back. Someone at Bitmain really believes in ETH at these prices. Half of all Bitcoin holders are now losing money, and the on-chain data is brutal. Nearly 50% of all circulating BTC is underwater, and long-term holders, the people who are supposed to have diamond hands, are starting to capitulate and sell at a loss. When long-term holders start panic selling, historically that's been a signal that we're either near peak pain or about to get a lot more of it. The bulls will call this a capitulation bottom. The bears will say there's more blood coming. Either way, the data is screaming. The Trump family's Bitcoin company just hit 7,000 BTC, and they are not slowing down. American Bitcoin Corp, backed by Eric Trump and Donald Trump Jr., has been aggressively stacking sats while the market bleeds, and their holdings are expanding fast. Love it or hate it, political money flowing into Bitcoin is a signal that the asset class has crossed a point of no return in American politics. When a former president's family is running a mining company with 7,000 BTC, crypto regulation isn't going away, it's getting embraced. Wall Street is saying crypto stocks are 60% off and it's time to buy. Bernstein, one of the most respected research firms on the street, just told clients that the massive crash in crypto related stocks is a rare buying opportunity at what they're calling a big discount. When a firm like Bernstein puts out a buy call at these levels, institutional money pays attention. Whether this is the bottom or a falling knife depends on macro, but the smart money is at least starting to nibble. And speaking of macro, rate hike bets are building for both the Fed and the Bank of Japan, so buckle up. That's your crypto news for March 30th. Stay sharp out there, and we'll see you tomorrow.